And for video number 2, regarding the fantastic markets on Friday and yesterday, Monday. Trading was halted 1,200 times Monday. The high level of trading pauses highlights just how extreme the sell-off was in a short span of time. And they're going to blame this on China like you can't believe. Not that you're going to be surprised. Fears about China's economic slowdown caused the Dow to plummet over. Fears about China's economic slowdown caused the Dow to plummet over 1,000 points when the market opened. The Dow ended down 588 points, its worst decline since August 2011. Remember Lindsey Williams? Watch China. China's the big one. Installed after the May 2010 flash crash, the so-called circuit breakers are designed to slow down dramatic selling or buying. They are typically triggered when stocks dive or spike by a certain amount in a matter of minutes. So they can crash or go skyrocketing, and the circuit breakers will kick in either case. But you know they don't put circuit breakers in because the price goes up on stock markets, do they? No, but they will for gold and silver, and they have done so recently. Never before done, by the way. We'll talk about that in a second. They are typically triggered when stocks dive or spike by a certain amount in a matter of minutes. Think of it as a timeout. Trading is halted for 5 minutes, giving investors a chance to calm down and allow cooler heads to step into the market. In other words, allow the government to step in and intervene. Circuit breakers helped prevent a flash crash. Normally there are a few dozen trading halts a day, but Monday wasn't a normal day when it had 1,200 halts. Quote, "That's huge. I've never seen that many halts," said Dennis Dick, a market structure consultant at Bright Trading. Dick said he believes the stock market may have suffered even worse losses if it weren't for those trading pauses. Quote, "The circuit breakers are designed to prevent a full-on flash crash. Those circuit breakers kind of saved the day," he said. Now, I want to talk about another circuit breaker or two that was also put into place very recently, as in the end of last year. Recent enough for me because that particular type of circuit breaker had never been installed before, so to speak. And it's specifically for gold and silver. Nothing else, just gold and silver. When they did this change last year, nothing else was affected, precious metals. And what they did, I've mentioned this a lot of times. I have to mention it again because every day, every week, every whatever, I'm getting new subscribers. I don't get a bunch at a time, but I get them. They may have never heard me say this. That's why it's so important. Not to mention, it doesn't hurt to keep pounding something into somebody's head who may or may not think about these things and, I don't know about silver and gold. You know, they push the price down. If they can push the price down for this long, well, I don't know if I want to get in it or what. You know, you have these doubts. Fear not, my friends. Have no doubts. Reason being, they installed circuit breakers for gold and silver. First time ever. Now, let's go back to 2008, 2009. Silver was around 17, 18, 19, 20 bucks at one point. 21 maybe, I think. And they smashed it from 20 or 21 to 17 like within seconds. And then ultimately, which I want to say was 2008. By 2009, they had a little mini version of that again that brought whatever it was at, it brought it down to like 10 bucks, like rapidly. As a matter of fact, it was like 9 something and some change, but that was so brief I couldn't even capitalize on that. It went to 10. I mentioned the story before. Went out on the sales floor at my job to my buddy Frank. We've got to get some silver right now. It's been smashed. We're never going to have an opportunity like this again, trust me. He saw the price. Oh my God, let's get on this. Called around, was able to secure some silver eagles, and bought a bit, myself and him. Of course, looking back, man, I wish we would have bought some more. We should have bought some more. Hindsight is always 20/20. So it didn't matter at that point. I just realized I'm going to keep, definitely just keep buying silver, regardless of the price. It's just like you invest in the stock market every day. Oh, I got a 401k every week. Oh, you get a little bit of your check taken out for your 401k, right? Yep. And when you do, you don't get to say, oh, well, hold on, the market's down, or the market's up too high right now. I'm waiting for it to go back down a little bit. Can you hold off on my 401k contribution for like 2 weeks? No. It just keeps coming out of your check regardless. The same thing should be said about gold and silver. You're not trying to buy low and sell high. This is not what that's for. It's never been what that's for. It has always been to protect your wealth, any wealth you have, during a major economic crisis. That's it. What I've come to know, and knew this early on, it's going to do a little more than protect your wealth when this goes down. You're going to have, again, depending on how much silver you have, but you are going to have a small, maybe even a large fortune when this all goes down by having those precious metals. So anyways, price starts climbing. Now we're in 2011. Price is rapidly climbing for gold and silver. Gold peaks out at around $1,900 an ounce. Silver peaks out at right around $50 an ounce. And then the club gets a hold of it once again to destroy people's willpower to ever invest in those precious metals again, as far as they were concerned, which had backfired like I thought it would. Sorry about their luck, elite. But they pushed the price down 40, then back up, then went back down 30s, 40, 30s again, 20s, back up to 30, back down to 20s. And I do recall mentioning when we were in the mid-20s that, guys, I got a gut feeling the club ain't done yet, and we can see some very low 20s, maybe even into the teens, but you got to keep in mind they can put it anywhere. I do know I've said that. Not because I just anticipated all of a sudden, but because I know that they can do this, and the more they do it, the more they're trying to tell people to stay away from those things. They're not worth money. You're losing money if you invest in these things, and we're going to show you over and over again that we will just keep dropping the price so that you don't have any kind of investment here. We don't want a competing currency against the US dollar, and because of that, we will continue crushing the prices as needed. However, as they've done that, a funny thing happened, as I said would, and many others too. I'm not just taking credit for this myself. They have a double-edged sword upon themselves. One side says, crush the prices and crush the willpower of the people wanting to buy these things, and they'll go away. That's theory one. And that's, again, part of the double-edged sword. The other side is that every time they do that, a funny thing happens, and people start buying like crazy. So, it's not working. So, as you've seen recently, they continued trying to push the price down. They push it down, goes back up a little bit, push it down, goes back up again, pushes it down. And each time, massive buying occurs of the real metal, not paper contracts, even though record-breaking numbers of paper contracts are now out there for the first time ever. But the more important piece is record-breaking amounts of silver are being purchased. Same with gold. Not necessarily record-breaking, but tons of it being sold and purchased by people. Each time they push it, a backlash occurs of massive buying. Physical demand. So they're basically digging their own grave, so to speak. So what happened last year, end of last year, they changed some rules around. The CME group, who controls the commodities market, which is ran by banker club members, by the way, changed the rules around, added some new rules. silver and gold, we're going to install some circuit breakers. Now, hold on. Why didn't you install those circuit breakers back when it was $50, or even during the time when it was rapidly going to $50 on the upside? And especially the downside. No, we don't need no circuit breakers, because they can't have circuit breakers stopping all these sell orders. They want a ton of sell orders, which is by them with their paper, of course, so that the price gets dropped out from underneath the market. They also, numerous times, sometimes even back to back, would say, oh, we're raising margin requirements on all these paper contracts. So anybody that had a futures contract open on a Friday, they would love to do this, said, okay, by Monday, we're giving you Monday, by end of the day or whatever, to increase the amount of margin money in your account, because we've increased margins on precious metals because of, the volatility, when there wasn't even any volatility, actually. Safety purposes, of course, what they said. Which, of course, on Mondays, any trader with half a brain is going to say, I'm not putting more money in my account to maintain my position, and even if I did, I already know everybody else isn't going to, which is going to cause a sell-off, which is going to cause my open contract to be worth less, so I have no choice but to sell. Like everybody else, it's a stampede, let's all sell as fast as we can. Which is exactly what happened, and pushed the price down. So, that was one of the tools in their toolbox to use. They did it numerous times. And they only seemed to do this when the price was going up. That's funny. Why don't they do it when the price is going up? Volatility is volatility. There's still margin calls happening when the price goes down. Why didn't you have it happen then? Because they want the price to go down unimpeded. So they added these circuit breakers last year, end of last year, that says if gold moves $100, circuit breaker up or down, $100, circuit breaker is triggered. If it does it again after the circuit breaker is released, so to speak, okay, you can resume trading. If it does it again, another circuit breaker is triggered. Same time frame, I guess, same amount, $100 is what triggers it. It can happen 4 times, so a total of $400 in a trading session will trigger circuit breakers. But I noticed after that, it's free game. It's whatever. If it goes again, then it just keeps going. There's no more circuit breakers, apparently. And they did the same thing for silver. Silver, I believe, was $4 moves. Or $3 moves. 4 times in a trading session during a day would be the same thing. So if it moves $3, circuit breaker is triggered. If it moves $3 again, circuit breaker is triggered, again, triggered, again, triggered, and then after that, again, I don't see any more triggering. Why would the club implement circuit breakers? Think about this. Where's silver at right now? $15 roughly. Matter of fact, just to be safe, because you never know where the club puts it when you wake up in the morning. $14.82. Okay. Let's just round that off to 15 for right now. Whatever, $14.82, $15. One trading session of the worst kind in history would be a $12 move down, right? 3, 3, 3, 3. And let's say all the trading action is sell-off orders. We're at $14.85. That means $12 has to be wiped off. 12, 13, 14, 85 cents. $2.85 would be the price of silver right now should a big sell-off occur. Thanks, circuit breakers. Is silver really going to survive and miners going to survive at $2.85 silver? No. I would love to see those prices, to tell you the truth, because do you know what I would do? The lengths I would go to use credit cards or anything I can get my hands on to make some massive purchases like you've never seen before. Yes, I would. But those circuit breakers also kick in if the price goes up. And if you're the club and you know time's running out on your paper games and we're really experiencing a shortage issue behind the scenes, which is very visible on the physical silver and gold markets, especially silver, then you know exactly when and how much time you have out in the future, roughly, of when you are going to expect some major silver and gold shortages, which means you're going to expect some huge price increases because you're not going to be able to do the little delays, and the mint's going to stop making them just temporarily for a couple, 2, 3 weeks, 4 weeks, and then we're going to get back to making them. When that can't be done, and you know it's coming, you know roughly how far out, because you're the ones doing this, how far out this anticipated event or events are going to be, roughly. So let's make sure we have some things in place in advance for when those days come. They put the circuit breakers in at the end of last year. Never before have we had anything like this in silver and gold in the markets. All of a sudden they're there. Don't think for 1 second the elite put them there to help protect you so that you have some time to sell off without getting crushed because a circuit breaker kicked in at $3. And it's however long it lasts, you have time to go sell off your paper. It's all paper contracts. They're not expecting you to go to the coin dealer and sell your stash. This is all paper market stuff. They are not trying to look out for you. They've already shown they want to crush silver over and over again. Same with gold. So if these circuit breakers are implemented, and they were, up or down moves, you can be rest assured they implemented them because the price is going to be moving up in gold and silver exponentially. Even Alan Greenspan, former Federal Reserve Chairman, had his little private party, and someone had been able to ask him, "Sir, where do you see the price of gold in the near future?" And he said something like, if I recall, in 5 years I think it'll be exponentially higher. Something like that was his reply. Not exact amount or an exact time, just I'd say within 5 years or so, I would say it would probably be exponentially higher. No other comment needed. That was his response. And as Ron Paul asked Chairman Bernanke back in the day, not that long ago, a few years back, is gold money? No. Then why do central banks stockpile it? Just tradition. And as he's saying this, his facial expression is just, "Oh, please don't ask me that. Oh, don't make me answer that. Oh, God, what can I say to that? I got it. It's a family tradition." Hank Williams Jr. Yeah, it's a tradition. Family tradition of bankers. Federal Reserve tradition. Right. Take care.